Hello and welcome to this Baillie Gifford live webinar, which is going to be all about the Positive Change Fund today. I'm Katrin Schindler from CityWire, and with me is Rosie Rankin, Director and Positive Change Specialist at Baillie Gifford. Over the next 45 minutes, we'll be discussing the fund's performance, its core philosophy, and the joys and woes of investing for impact. And the way this works is Rosie and I will be having a chat for about 30 minutes, and then it's time for your questions. So if you have any, please submit them at any time, and I'll put them to Rosie in the last 10 to 15 minutes of the session. Rosie, let's get started, shall we? Welcome and great to have you.
Thank you. Thank you very much for having me this afternoon.
So Rosie, let's get started with a question on the performance of the fund. So the Positive Change Fund has delivered quite a strong one since its launch in January 2017, but it hasn't quite lived up to expectations since. Why is that?
Yes, you're absolutely right, Catherine. Performance since inception has been very strong. So if you look at end of May data over the last 5 years, the fund has returned about 20% per annum compared to about 12% per annum for the index. However, over the short term, the story has been very different. So year to date, the fund has fallen about 24% compared to a 5% fall for the index. And I completely appreciate that's very uncomfortable for clients, and it's really important to understand why is that. And I think over the last 6 months, several factors are changing investor sentiment away from growth. Markets are having to contend with multiple unknowns and areas of risk. We all read about them in the news every day, whether that's prolonged supply chain disruption, price inflation, tightness in labour markets leading to wage inflation, or continuing COVID-related disruption. And of course, sadly, that's all compounded by the current tragedy of the war in Ukraine and its repercussions. And we've seen really high inflation, reaching heights we've not seen for decades. And that, combined with the significant change in tone from central banks, has shaken markets and had a detrimental impact upon company valuations. Now, many of the companies we invest in are high on promise, but due to their relative immaturity, the majority of their cash flows can be years into the future. And of course, this makes their valuations more susceptible to changes in interest rates. So as a result of all of that, we've seen a temporary disconnect between the strength of companies' operational performance and their share price performance. So whilst the majority of companies in the portfolio continue to demonstrate strong revenue growth and earnings growth, this has gone largely unrecognised by the market. If you look at the portfolio, overall revenues growth is 3 times that of the index, and earnings growth about 25% higher. Now, that's not to say every company in the portfolio is doing well. There are some companies which are struggling to thrive in the current environment. I would name companies such as Peloton or Beyond Meat, Berkeley Lights. And those are companies which have faced operational challenges over the past year. Now, we've done further work on those companies, including meeting senior management to check that our investment and impact case remain intact. We've concluded we'll retain our investment in those companies at present, albeit at relatively small position sizes. Overall, they're about 4% of the portfolio. And I guess that does illustrate our willingness to hold companies through short-term operational weakness, providing we see that their long-term potential is intact.
Mm-hmm. And if we could just focus on the external factors you just mentioned, inflation, the war in Ukraine, how exactly is your team reacting to that, well, rather challenging market backdrop?
Yes, you're right. It is challenging. And if I think about it, I would almost point to kind of 4 things that we've been doing. I think the first is keeping calm, sticking to our philosophy and process. I think in challenging times, your philosophy and process become your absolute anchor. Secondly, we've been looking at the resilience of all the companies in the portfolios. So looking at how individual companies will fare during these challenging times. So for example, in regards to inflation, looking at whether companies have the pricing power to enable them to raise prices to offset the impact of rising input costs and potentially rising labour costs. Thirdly, and this may surprise clients, we've done very little trading. We don't think that trading into volatile and very unpredictable markets is a good way of adding value for our clients. We have very much adhered to the view that we want our position sizing to be reflective of our long-term conviction in holdings, so very little trading. And fourthly, trying our very best to remain optimistic and finding new ideas for the portfolio. So a lot of our time is still spent on research and looking for those ideas that will really help to drive positive change over the next 5 to 10 years and really add value for our clients. So it's been a real pleasure to get out and about again, to actually visit companies and potential candidates for the portfolios. So that's been consuming time too.
Yeah, I like what you said at the beginning, keeping calm, always a good thing, but easier said than done, I guess. Focusing on the Positive Change Fund and its appeal to investors. So I have to check my numbers actually. So it was the most bought sustainable fund among ISA customers between April 2021 and February 2022. But what is it that makes the fund so appealing?
Yeah, I think first of all, it's really pleasing that the fund has enjoyed such good support. And I think it's probably because the fund has quite a simple proposition that I think resonates with ISA customers. We have two objectives: to generate attractive investment returns over the long term and to contribute towards a more sustainable and inclusive world. And we believe that those two objectives are entirely complementary. You don't have to sacrifice one for the other. And that's quite intuitive to see from many of the companies in the portfolio, because ultimately ISA savers understandably want their savings to grow over the long term. But if they can do that hand in hand with investing in companies which are having a positive impact, I think that's really attractive.
Fair enough. And if we talk about the core philosophy of the fund, which is based on the belief, like you said, that capital can be a powerful mechanism for change, what kind of change is it that you're aiming for? It's a very broad question, I know, but...
It is a really broad question, but it's a really good one, because ultimately we're looking for companies that can do much more than just have a positive benefit through their activities. We're looking for companies that can really drive change and who are producing a good or a service that's a real improvement to the status quo and addressing a challenge. It's perhaps interesting to explore that a bit further. What do I mean by the difference between having a beneficial impact and driving change? And perhaps the most relevant example could be by looking at the healthcare sector, because on the face of it, you would think that really every healthcare company has a positive benefit. Ultimately, they are producing a medicine or a therapeutic or a product that is benefiting patients. So would all of them be candidates for positive change? And the answer is no, because what we're looking for is the small subset of those companies that are really innovating to do something that is better than the status quo. So you could see that with a vaccine company such as Moderna, for example, which has innovated to be at the vanguard of producing a whole new category of vaccines using mRNA technology. Or Dexcom, which produces continuous glucose monitoring systems for diabetics. And again, they were the company that allowed diabetics to monitor their condition without using a finger prick test. So it's companies that are kind of raising the bar, that are driving change, and hopefully bringing the rest of the industry with them. And it's in that way that we really think will help address global challenges, but also generate attractive returns. Mm-hmm. Because if you look at the future, companies such as Moderna will increase earnings and revenue growth as they develop more vaccines to treat different conditions. similarly with Dexcom, will expand their patient population over time. So it's that type of company that we're looking for within positive change.
Companies that are blazing a trail, kind of.
Yes, really kind of being those agents for change.
Got it. Brilliant.
Because yes, we're certainly, unfortunately, not short of challenges in the world. So it's looking for companies that will really innovate to come up with those solutions.
That actually leads perfectly into my next question, which is, you just said also that you look for companies that are addressing global challenges. But if you could quickly talk about what does that look like in practice, and also what role do your 4 impact themes play in that regard?
Yes, so we have 4 impact themes. So essentially, we are looking for companies who are addressing challenges in the area of social inclusion and education, environment and resource needs, healthcare and quality of life, and base of the pyramid. Now, it's important to say we don't use our themes for asset allocation. So there's no intention to have 25% of the portfolio in each theme. But instead, we use our themes to guide the research agenda, and actually they're a useful framework in terms of impact reporting. But what do I mean by guiding the research agenda? If you take social inclusion and education, education is a really interesting area because it's such an obvious and powerful enabler of change. Allowing people the access to good quality education can literally be transformative in terms of their employment opportunities and their economic opportunities. So it's been an area that we've been researching for a number of years to try and find companies in that area. But there is an inherent conflict, because ultimately you want companies that are offering high quality, low cost education. And is there a tension there between being a profitable and growing business? So it's been an area where we've done extensive research, speaking to different companies, speaking to different educational experts to try and understand the area. And then ultimately we've come up with investments such as Coursera, which is an online learning platform. It offers everything from degree courses to quite short vocational courses, or Duolingo, the language learning app, which many of us may be familiar with, which powerfully offers access to language learning for free, yet monetizes that through advertising and paid for subscriptions for people who want to access the platform without advertising. So yes, it can be a lengthy process in terms of research, come to some dead ends, but in the end it can be incredibly fulfilling and rewarding.
Can we quickly talk about the base of the pyramid theme, as in what falls under that theme, what kind of companies would be part of that category?
Yes, I'm often asked this because I don't think it's sometimes not immediately obvious what base of the pyramid is. And it's really looking for companies who are helping those at the very bottom of the global income ladder. So incredibly, there are still 4 billion people in the world who live on less than $3,000 a year income. And we're looking for companies who can help those people, whether that's through the provision of basic services, through financial inclusion, or financial resilience. So, for example, we invest in a Kenyan company called Safaricom. Now, it's a mobile telecommunications company, but it has a mobile payments platform called M-Pesa, which allows people to transfer money using their mobile phone. Critically, you don't need a smartphone for M-Pesa. You can do it through SMS technology. And so, of course, that helps drive financial inclusion. Importantly, though, they also have a division of Safaricom called M-Tiba, which allows people the ability to save for healthcare costs. And the importance of that, if you look at some of the drivers of global poverty, is that it's often unexpected shocks such as poor health, which tip people into poverty if they don't have the ability to pay for healthcare or the ability to subsidise lost incomes. So, a service like MTBA can be a really powerful way of helping to increase people's resilience to future economic shocks.
Yeah. And what kind of challenges do you encounter when you're looking for those positive change companies? Or does it depend on the theme?
It does depend a bit on the theme, because my initial answer was lots, because whenever you're looking at companies, but the one common challenge I would say across all our themes is there's no such thing as a perfect company. And I think when we're looking at companies from a positive change perspective, we're looking at three factors. We're looking firstly at product impact, which is what we've really talked about so far. So what does the company do and how does that help solve a challenge? Secondly, we look at intent. So actually, what's the intent of the senior management team? Have they got a clear strategy to help solve a global challenge? And thirdly, we look at business practices, which is much more like conventional ESG analysis. So how does the business operate? What's its attitude towards the environment? How do they treat their employees? How's the company governed? And it can be a challenge because we haven't found a perfect company. So you can see a company which has some fantastic product impact, but perhaps there are outstanding questions around business practices. Or you can see companies which have a portfolio of products, some which are very positive and some which are negative. Ørsted, which is in the portfolio, it's the world's largest generator of offshore wind power, is a great example. Its core part of the business is offshore wind power. It still has a residual part of the business, which is coal-fired power generation. Now, okay, it accounts for less than 10% of revenues, but it's still something that we've got to weigh up in our minds when we're assessing Ørsted.
Yeah.
So, yes, no perfect company yet.
And if we step away from how you invest in companies and look at the flip side of that, so what does your sell discipline look like then?
Yeah, it's just the reverse of our buy discipline. So we will sell a company if we lose conviction in its ability to meet either or both of our two objectives. So if we're reviewing a company and we can't see its ability to double its share price on a 5-year view, then we would sell. And similarly, if we don't see it delivering the positive impact that we anticipated, again, then we will sell. So it's very much looking at every company through that dual lens of investment and positive change.
Mm-hmm. And I'm also interested in how you quantify the fund's impact. So you have an impact report on your website that basically puts a number to the impact each investment in the fund has. So for example, and I have to check my numbers again here, the portfolio apparently saves 1.2 trillion liters of water and contributes to disease prevention for about 540 million people, which is quite a lot. But how do you get to those seemingly random numbers, or put differently, how do you measure something as ephemeral as positive change?
Yes, it's a great question. We do produce an annual impact report, and I'm pleased to say that the numbers are anything but random. How we approach it is for each and every company in the portfolio, we report on the impact of its products. And we report on that both on an annual basis, so what's the impact of their products been over that calendar year, but also looking at their longer term systemic impact using the UN Sustainable Development Goals. And for that, of course, the metrics for each company will be different depending on their area of activity. And we typically use company published data for that. So if we take the figure that you quoted there on water saving across the portfolio, that's actually an aggregation of 2 companies within the portfolio. Xylem, which is a water infrastructure business. Over the year in question, it allowed customers to save about 450 billion litres of water. And then the second company is Ecolab, which is a specialty chemicals business, and it allowed customers to save about 750 billion litres. Mm-hmm. So add 450 and 750 together and you get the 1.2 trillion. Now, of course, these are just good indications from company data. Measurement is improving all of the time, but we're very reliant on the underlying companies and their methodologies. We do use a third-party auditor to provide assurance in our impact reporting. I think almost what's most interesting is the second part of your question about impact being ephemeral and how do you measure that, because there's lots of impacts we're not able to measure.
Such as?
So I mentioned some of the education companies, for example. So what can we measure there? Well, you can measure the number of students that are accessing the online education platform. You can measure where the students are in the world. But in terms of truly understanding how impactful that education has been in improving their prospects, that's the bit that's really difficult to measure.
Okay.
And it's that bit that's most important. Because so measuring, it's very hard to quantify some of the truly transformational changes we're seeing.
Yeah, I get that. Now coming back to the social environmental benefits of the companies you invest in, you mentioned Ørsted, for example. I mean, it's pretty obvious if you have healthcare companies or renewables to see the benefits they can have on people and the planet. But were there or are there any companies in the portfolio that you actually had to fight for because people or your team just couldn't see what they could do for society and the environment?
Yes, absolutely. There are some companies in the portfolio where their impact on driving change is more indirect. We call them enablers. Two great examples from the portfolio would be TSMC and ASML. Now, both of those companies are involved in various stages of semiconductor production, so the production of chips that you get in technology. And I think quite understandably, people will raise their eyebrows and go, huh? Why is that in the portfolio? But we regard them as absolutely critical enablers of driving change across all four of our themes. So, for example, if you are looking at Safaricom and their ability to provide mobile telecommunications and mobile banking services, absolutely reliant on technology, as is Dexcom or Moderna or Illumina with their gene sequencing machines. Coming on to environment and resource needs, we simply wouldn't have been able to develop electric vehicles or be able to see some of the advances in renewable energies again without semiconductors. And TSMC and ASML are so critical to the ecosystem of semiconductors. And it's really their advances in research and development that have allowed semiconductors to become ever more efficient, ever more technologically capable, and ever cheaper. That has really helped to enable change. So for us, they absolutely merit a place in the portfolio. But I would completely agree and have a lot of sympathy with the view that it's not immediately obvious why they're there.
Mm-hmm. That leads nicely to my next question. You mentioned TSMC, but there's also Tesla, which is one of your long-standing holdings. And some people would consider Tesla to be, or to bring anything but positive change, basically. I'm thinking of racial discrimination incidents in the past and the fact that they have been removed from the S&P 500 ESG index. So why is it that you still think they're one of the good guys?
Yes, yeah, I'm glad you asked about Tesla. Tesla has been, as you said, a long-standing holding. It's been in the portfolio since the inception of positive change back in January of 2017. And it's probably an ideal illustration of my earlier assertion that there's no such thing as a perfect company. And actually, perhaps going back to those three factors that I mentioned, in terms of intent, Elon Musk, I would agree, is not without controversy, but it's undoubted that he's displayed a really strong intent to disrupt an entire industry and help the world transition to using more renewable energy. Similarly with product impact, you look at the impact not just electric vehicles have had but solar panels and battery storage in terms of enabling customers to save CO2 emissions. So that's for our first two factors, but looking at that third factor of business practices, that's undoubtedly where there's been much more controversy. Now, on the positive side, we've seen meaningful progress in business practices over the years that we've owned Tesla, but that's not to say it's a perfect company, and we're far from complacent around their business practices. As you rightly point out, there's ongoing litigation against Tesla in terms of allegations of racial discrimination. Now, as kind of long-term shareholders, we've engaged with Tesla to understand their policies and processes around diversity and inclusion and their approach to working practices, and we'll closely monitor the outcome of the litigation. So I would say we've seen tremendous progress from Tesla, but we definitely haven't, there's still areas to engage on and to watch, and I don't want to be complacent about that. But I think actually one concluding remark I would make about Tesla is that we talked earlier about companies driving positive change, and I think Tesla is such a great example of that because it's been such an agent for change. I think it's arguable that without Tesla's success being a catalyst for the whole automobile industry to start thinking and developing electric vehicles, that progress would have been much slower. So I think in terms of Tesla's role as that agent for change, it's been really powerful.
Yeah, definitely. So what's on the horizon for the Positive Change Fund? As my last question before we move on to the audience questions.
So what is on the horizon? Lots, but I will limit myself to probably highlighting a couple of things. One, I mentioned the importance of searching for new ideas. So we've got a really rich pipeline of areas we're exploring. We're continuing to do lots of work in areas of sustainable agriculture. So looking at companies involved in technologies such as vertical farming, cultured meat, insect protein. We're continuing to look at that transition that we're seeing towards more renewable energy and various companies that are involved in that. We're looking at developing technologies that will help us to tackle climate change, like carbon capture technologies, or areas such as synthetic biology. And then we continue to look for ideas in base of the pyramid. We would love to have more exposure to base of the pyramid companies. So continuing to do quite a lot of work in that area, and I've got some research trips scheduled for later this year where we hope to go and explore some ideas in person.
Sounds exciting.
Yeah, it is. It's really exciting in terms of the opportunities. And the second thing that I wanted to mention was we are currently working on our 5-year impact report, which we'll publish next month. Now, why is that of interest and why am I mentioning it at all? It's because we're quite excited about it because in addition to reporting on the annual impact from each company in the portfolio, for the 18 companies that we've owned since the inception of the portfolio, we're also reporting on their 5-year impact over time, which is where it starts to get quite meaningful that you're really looking at, 5 years is our investment horizon. So starting to report on the impact that companies have had over 5 years is really quite exciting. So that will be available next month for anyone who's interested.
Lots in the pipeline, it seems.
Yeah.
Brilliant. Now let's take a look at the questions from the audience, which have been pouring in the last 30 minutes. So the first one refers to performance, and that person is asking, how is it that the Positive Change Fund is always ahead of the trust? Year to date, for example, the fund is down 30%, the trust 40%. Rosie, why is that?
Yes. So for those who don't know, we have Positive Change Fund, which is an open-ended fund, and Keystone Positive Change Investment Trust, which we've been managing since February of last year. Now, there will always be a difference in performance between the open-ended fund and the investment trust, because whilst they share all the listed companies in the portfolio, there are some key differences. One is that the trust has the ability to invest in private companies. That doesn't really account for the performance difference that you're seeing, because currently the exposure to private companies within Keystone is relatively low, around about 2%. But the two aspects that will account for the difference that you're seeing is, one, the trust employs gearing. Now, of course, that magnifies performance both upwards and downwards, which you will see. And secondly, in Keystone, there is we don't have the 10% limit on position sizes. So, for example, a company like Moderna is a much larger position size in Keystone, and that has been really impacted by the volatility and negative market sentiment I was talking about. So there will always be a difference, but by no means will that difference always be an underperformance difference. It will just be a difference.
Okay. There's also one question about China, and that person is asking, how is your allocation to China changed given the more positive outlook of late for the region after the challenges of the previous 12 to 18 months?
Yes, so in terms of how we think about China within positive change, it's very much part of our investment universe. We're thinking of challenges in a global context, and of course China is home to about a fifth of the world's population. And when we look at big global challenges such as climate change, of course, we absolutely need China's participation in order to solve those challenges. So China has always been very much part of our investment universe. Having said that, we don't make allocations on a top-down basis, thinking about country allocation and finding companies to suit. What we'll always do is our starting point is always that bottom-up fundamental research. So currently exposure to China is relatively low. It's only about 2% in one holding. But it's very much an active area of research. So we think about, so it's a very long way of answering your question. To answer the question succinctly, is to say China is very much part of our universe. We remain enthusiastic about opportunities there and actively looking at a few names.
Fantastic. We also have a person who refers to positive change holdings which overlap with other non-impact Baillie Gifford funds. And they are asking what separates the positive change fund as an impact fund compared to other funds from Baillie Gifford. You basically answered the question already, but maybe if you could put it in a nutshell and sum it up nicely.
Yes. No, really happy to answer that. So whoever asked the question is absolutely right. There are a number of holdings in the portfolio that are held somewhere else at Baillie Gifford. So around 90% of the portfolio is held somewhere else. It might be in a global strategy or regional strategy. I'm almost going to turn that on its head a bit to say actually what would make some of the companies that are held elsewhere in Baillie Gifford not eligible for positive change. I'll take a company actually, a good example is Kering, the luxury goods company. I don't know if you're familiar with them. They've got a portfolio of luxury goods companies that produce sort of high-end handbags and accessories. Now, Kering is a world leader in terms of business practices, extremely thoughtful about the planetary boundaries of the products they're producing. But ultimately, if you look at their product portfolio, it's luxury goods, and it's hard to argue how those products are really addressing a societal challenge. I mean, providing pleasure to many people, but in terms of driving change, we're not seeing that, so it wouldn't be eligible for the positive change portfolio. But hopefully that helps illustrate that we're so focused on products and services and how they're helping to drive change, but you will always see a degree of crossover with other Baillie Gifford strategies, because ultimately we share one of our objectives with our colleagues, that of attractive investment returns.
Mm-hmm. And on that note, which leads nicely to another question, is can you give some examples of companies where you lost conviction in either the objective or in the objective which you then had to subsequently sell?
Yes, I can give a couple of relatively recent examples. So, for example, last year we sold out of a US-based healthcare company called Glaukos. Now, it manufactures tiny stents that go into your eye. Now, still very happy with the impact that Glaukos was having in terms of improving people who had glaucoma's ability to manage their condition. But in terms of investment return, our conviction was really diminished because they didn't appear to have a sustainable competitive advantage that we hoped. Competition in the sector was much stronger. So we took the decision to sell from Glaukos for investment grounds. Thinking about then companies that we've sold out of on more impact grounds, we had within the portfolio Kingspan, the Irish insulation business, which manufactures insulation panels for businesses, for buildings, helping them to be much more environmentally efficient. But we started to have quite serious reservations about Kingspan in light of the Grenfell Tower tragedy and the inquiry there, which illuminated some quite concerning practices at Kingspan, which really served to diminish our conviction in Kingspan. And following extensive engagement with the company, we took the decision to sell from them.
Yeah. Interesting. And one timely question on inflation, because we have to talk about inflation at some point. How do you expect it to impact the performance of the fund in the short term?
Yeah, so as I said, we've been doing some inflation work. Now we've been doing that in conjunction with our investment risk teams, so to look at the resiliency of the portfolio across all the companies. And we've also been doing individual work with companies to understand how they're approaching it from a business perspective. I would say that overall we're quite comfortable that companies are fairly resilient. The reason being that many of the companies in the portfolio aren't really companies where spend is discretionary. They're providing an essential good or service that means that they're able to have quite significant pricing power. And almost the question for us when we're thinking about it from a positive change perspective is to ensure that they're exercising that pricing power responsibly. So, for example, with the two semiconductor companies I mentioned, TSMC and ASML's machines, they have a virtual monopoly in EUV lithography machines. So we want to see them exercising the significant pricing power they have responsibly. Similarly with TSMC. So it's really been understanding every company from a kind of individual level. At the other end of the spectrum, we have companies in the portfolio such as Ecolab, which is a specialty chemicals business. And it's a really good example of a company which provides an essential service to its customers, but is a relatively small portion of their customers' spend, kind of less than 5%. So they do have the ability to exercise a degree of pricing power without customers thinking that they would switch providers. So again, it's just thinking about the companies on an individual level as well as working with our risk team.
Yeah, broad brush approach doesn't work really, I guess, in that environment. And based on that, just before we wrap it up, maybe we could end on a more philosophical note, because we have a question about what is the mindset investors should adopt in such volatile times? And then also, what is the outlook going forward for growth funds in terms of performance?
Yeah, I can probably wrap it up into both. In terms of short-term outlook for growth funds, it's impossible to predict over the short term. But I think, and this is where I can wrap up into both, is actually what do we think long-term growth drivers are going to be? If you asked me what I thought interest rates would be in 12 months' time, I don't know. But if you asked me whether we absolutely need to be able to address climate change, the answer is yes. And that's not just a personal view for me, that is a view shared by regulators and governments. And we can see that climate change, as well as being a huge concern, is actually going to be a massive driver for growth as companies have to adapt and come up with solutions. And as a society, we need companies to help provide solutions. So I think these huge growth drivers that we're going to see over the next 5 to 10 years are very much in line with these big impact themes, because as a society, we need healthcare systems, for example, that work with efficiency and effectiveness and are able to adapt to our growing population. On population growth, we need our agriculture system to be able to produce enough food to effectively feed our growing population. Otherwise, the unrest that would predicate is unimaginable. So I think when you're thinking about these big secular growth drivers, very much in line with our impact themes. So that's where we're thinking about it in a long-term view, but really difficult to predict anything on a shorter time frame currently.
So in terms of the mindset, I guess the answer is focus on the bigger picture and try to cut through all the noise as much as possible.
Yes, and I think it's important to retain a degree of optimism as well. I think it's so, when faced with all the news that we're getting currently, it's easy to feel quite despondent, but it's retaining that sense of optimism that human ingenuity has the real potential to solve some of these big challenges, and that our capital can be a part of that. And it's maintaining that belief and focus too.
That's a really nice note to end on. Thanks so much, Rosie, and thank you so much for watching, and see you next time.